kind of advice do you have to homeowners?
Practicing that preparedness, starting the conversation now is always going to be a benefit to any association out there.
And welcome to Recovery Report Live, GlobalPro's deep dive into relevant business and insurance topics for community associations as well, providing actionable takeaways and valuable insights. We aim to update, educate, and inform you weekly. I'm Dan Odess, president of GlobalPro, where we manage risk to recovery. For more than a decade, we have represented thousands of businesses and community associations in the placement of insurance and the recovery from over $1 billion in damages. We are your source for insurance news you can use. Well, it's hurricane season, and no, I don't have any flies on my head, so I'm pretty good, and I'm excited for this broadcast. But unfortunately, those in Louisiana can't be so excited about this storm that's headed the direction. It's just kind of insult to injury. Right now, before the broadcast, I checked the update on it. Category 2, expect to strengthen to a Category 3. Thankfully, it'll be a little bit down around a Category 2 when it hits. But certainly, like I said, insult to injury for Louisiana, which is already dealing with recovery from Hurricane Laura. And think about that. That starts with an L, and we're a delta. That means we went through the whole alphabet, and we're in the Greek alphabet. We're using Greek words now and letters to represent our actual storm. So just a wow situation. But we're not out of the woods. Hurricane Wilma occurred on October 24th, 2005. So just think about that. October 24th, 2005, when you're getting into the holiday season groove and you're relaxing and just planning out what you're going to be doing in November, December, and around the new year, here comes a storm just rolling through South Florida. You had Katrina that was right before that, went up through Louisiana, which is also, just a scary event that occurred back in 2005. So stay prepared, stay vigilant, make sure you're doing all the things that you need to do as a business or community association to in the event that something does, just whip up or occur. And as a reminder, last week we had about 3 or 4 areas of interest out in the Atlantic. Thank God all of those have dissipated. We're left with Delta, but what a scary storm as it heads towards the Gulf Coast of the United States. Obviously, our hearts and prayers are with those in Louisiana in the path of Delta, and certainly anything we can do, please let us know. But on to some condo association news and some topics I want to talk about that are relevant to our audience here today, and thank you all for joining us. Recently, we have been doing quite a bit of reviews of loss runs for associations and providing them some consultation to track and to understand some of the trends that we're seeing in today's marketplace. One particular association, we looked at least about 5 different claims, water losses, that they had over the last 3 years. And what we were doing is we're trying to understand how the insurance company was actually paying their claims and what they were getting paid for, or more importantly, what they were not getting paid for, and how their contractors and experts involved in the case may have helped or inadvertently or advertently prejudiced them by providing erroneous opinions or any issues that there may have been with their invoicing and the accounting of what they actually billed for. And what we learned was absolutely incredible. It was the same insurance company. It was 2 different adjusters. So one adjuster handled 3 losses, another adjuster handled 2 losses, all water claims. 2 of the claims actually overlapped. It was a multi-story building, water most often from a water line to an HVAC unit in the hallway, which led to substantial damages. Each claim was well into the 6 figures when you throw all in the cost of the mitigation as well as the cost of rebuilding the damaged property. And some of the things that we picked up on was unit pricing for materials all over the place. And some of these losses happen within 30 to 90 days of each other within the same quarter. And as we know here at GlobalPro and our expert team of building consultants and engineers who analyzes things on a daily basis, the pricing updates are typically done on a quarterly basis. So if in the same quarter you have the same loss in the same building, damaging relatively the same property, same drywall, one end of the building is the same drywall as the other end of the building, why is that drywall different in price? Also, quantities. Quantities were dramatically different in some instances. Some instances they were okay with poking holes, other places they had to replace them. But when you looked at the dry logs, which are the documents that your mitigation company provides you, to give recommendations as to what it needs to cut out or what it can actually just go ahead and repair in place, we weren't finding any giant discrepancies between the time that they punched the hole or the time that they replaced it and cut it out and replaced it. So, what was driving these factors? A little bit of a confusing point there, and led to dramatic amounts of damage paid in each of these claims. So what we did is we went in there, we leveled it all out. We went back, analyzed the cost databases from those at the time that those losses occur. And as I mentioned, these losses went back 3 years. We ended up reopening those claims, working with the insurance company to understand their position and why they paid whatever it is, realizing in large part they had absolutely no justification for it. It just seemed to be the thing to do at the time. And ultimately, we had an over 400-page report with tremendous amount of detail, hours poured into this, no money out of pocket for association, and we ended up recovering more than $500,000 in new money for this association. So so just because you did what you did when you did it doesn't mean that you're done. So reach out to us, let us know. We do these loss audits all the time, especially around these times of the season when going through typical transition, if it were not a pandemic, with snowbirds coming in and out, getting ready for the holiday season. It may be a little quieter around your building or you got a lot of projects going on, but not a lot of the residents around. It's an opportunity for us to get into some of this documentation paperwork, check it out for you, and perhaps maybe you even have this type of results sitting there and you don't even know it, and money on the table that we can go get for you. Another thing that we're seeing is a lot of fear-mongering among brokers regarding the retention of public adjusters. Quite frankly, I don't really see this any different, in my opinion, than if I were making disparaging comments about insurance companies, a particular one, or how they were doing things. I don't think it can be tolerated, and I think it's absolutely unprofessional, and certainly something that I have addressed with the Florida Association of Public Insurance Adjusters. And if I get the opportunity, I certainly would with the Department of Financial Services, whether it's in the state of Florida, the Department of Insurance, and other states in which we operate. It's unnecessary. It's not true. They're saying things like that if you hire public adjusters or insurance companies see it, they're going to raise your rates or drop you. Show the proof. Show it. Show me something that proves this. Show me something in writing, because I certainly would like to show that to the Department of Insurance. It's not true. In fact, there's plenty of reports out there to show that there's so many positive reasons to hire a public adjuster that if you don't have one, you're kidding yourselves, because there's the facts are the facts. And unfortunately, while the insurance industry doesn't like the facts, and they constantly talk about the few bad apples, and I mean very few, that are in the industry throughout the entire country, and try to wager this war against consumer advocates and consumers to raise rates and to justify all these other changes to your policies, it's unfounded and certainly not reasonable at all. So the reality is that brokers need to stick to selling products. We'll stick to adjusting claims and helping our policyholders after a loss occurs. And just remember, your rates are not going up if you hire a professional. The only thing that's going to happen is you're going to get everything you're entitled to. So that's the honest truth right there. The one thing that is up against insurance companies, and something that's certainly true, are complaints. We talked about that in last week's episode a bit. The report that recently came out, 68% of policyholders reporting issues with claims handling. 68%. I mean, that's a remarkable number. The irony of the whole thing is within the same couple weeks of these reports coming out, you're hearing about massive layoffs from insurance companies. They're laying off employees left and right, consolidating companies, laying off more employees, claiming that they need to be more competitive, that the policyholder is going to see a benefit to this and the cost of the insurance. But since when was insurance about the cost? Isn't insurance about the recovery? Isn't insurance about when you have a loss, you getting paid? And if complaints against insurance companies are on the rise for claims handling, underpayments, delays, things like that, you're laying off people because you're concerned about price. Price is a selling point. Price isn't why you're buying insurance. You're buying insurance to protect your asset, to protect you from when these losses occur. So let's get this story straight here. Are they really laying off employees because they want more competitive pricing? Or is it because we're heading to the end of this year, which is tough economic times, and we need to report profits to our shareholders? I'm just throwing out the question. That's certainly up for debate. Obviously, maybe I'm missing some of the facts or don't know all the data. please feel free to fill my inbox with it. What I'm seeing right now is I'm seeing a tremendous amount of complaints on claims handling, and I'm also seeing insurance companies laying off a tremendous amount of employees. So how are you going to handle more claims or handle claims and be more efficient with your process if the justification for doing it is to be competitive on the cost of the insurance? I'm a little confused. The products that I'm seeing are becoming more restrictive with coverage, not providing more coverage. And if there's a rise in complaints and less coverage, and you're only focused on the cost or the premium that they're paying you, in a tough economic time, maybe I'm questioning your motives there a little bit, maybe a little bit more than a little. Let's understand. Let's make sure that we look at these things objectively. I understand that we're all going through a tough economic time. As a policyholder, as I am, developer, builder, own real estate, we have our assets here, GlobalPro, that we manage and deal with on a daily basis. We're evaluating these things, but unfortunately, sometimes the most competitively priced policy isn't the policy that's actually going to perform for you when you have a loss. So sometimes we too have to bite the bullet, pay that extra premium for the policy that we know is going to pay us if there's an event that the actual loss does occur. So we hope you do the same. The fact of the matter is, and in line with all of this, if 68% of policyholders are reporting complaints with regard to claims handling and an issue getting paid underpayment disputes, and we're also complaining about marketing tactics and really not having the coverage that they thought they had bought. And on the flip side, there's reports out there that by hiring a public adjuster, you receive an increased settlement over 700% more on that claim. Again, I scratch my head at some of the broker assertions that by hiring a professional, it's somehow going to be a negative. The facts is that it's certainly positive because, again, why did you buy the insurance? You bought the insurance to protect you in the event that something happens so that you get paid back. Well, if you're getting paid a 700% increase than those that don't hire a public adjuster, certainly we're making that policy work for you. So things to consider. Another growing issue I certainly want to address is in tough economic times and downturns, and then when the pendulum swings back the other way, right before it does that, we see a tremendous amount of rush to the end of these new projects by developers and contractors. We see value engineering. It's a fancy word for cutting costs and to increase profit. A lot of times it's using alternative materials. Maybe they're not even specified in the original plans because while they were going to go with the upgraded toilet valve, now they found an alternative plastic one that's not the braided aluminum, and because they're going to save $5 a hose and you got 400 units, do the simple math. It's a way you do that enough times, you start increasing profit. And we want to make sure that you look out for these things as consumers. And I'm hearing a lot of talks about claims against design professionals. We've had a number of claims come into this office that we've recently signed up where we're helping our policyholders who have experienced damage from negligent engineers, architects, contractors, developers, and investigating those things. As a licensed general contractor who has decades of experience in building, again, owning and operating property currently, I understand what it's like to be on the front lines as a contractor working with design professionals. It's difficult to forecast and anticipate unforeseen conditions, but you're charged with the obligation to do the right thing. And unfortunately, a lot of times, profit gets in the way of those things. And for any developer or contractor, you certainly don't want to see delays. So to avoid those things, a lot of times we may rush. And when we rush, a lot of times those things have got addressed. And when those things do occur, there's usually a rush to hiring a lawyer or getting an attorney involved to send notices and to start filing lawsuits, or this confusing thing called a 558 claim. The reality is that 558 and claims are two different things. 558 is a Florida statute. Claims are insurance claims. Certainly, like most attorneys know, when you make a 558 when you make a 558 lawsuit or you file one, a lot of times the entities that are defending or paying on these lawsuits are insurance companies. So when we're going to make a claim, not a lawsuit, you're afforded the opportunity to get answers sooner. And that's something that I don't think that a lot of community associations or business owners, for that matter, understand when they rush over to their attorney, is that had they looked at a potential claim, an insurance claim, prior to engaging in a 558 process or lawsuit, they may actually obtain a recovery sooner rather than later, or at least get answers to questions and allow the developer, contractors, or design professionals to give certain justifications or information about what led to the issue, to understand a little bit of the position, so that you know how to react or respond to it, and you can kind of figure out what experts you actually need to retain, rather than doing it ahead of time and then getting into this process, which is just very expensive and takes forever. Again, it doesn't mean you shouldn't consult with an attorney. It doesn't mean that you're not going to have to file a lawsuit or engage in the 558 process, because we're obviously true advocates and proponents of that. But making sure that you do it so that there's some value add, that there's a reason, justification for it, is important, so that you don't run a massive deficit and the only one that's winning here are the experts or the law firms on either side. That's a very important thing, and it may be a confusing bit of information, because we're so in tune to thinking about 558s as claims, and rushing to counsel or to the courts to get answers, but it takes years for that stuff. The reality is that if you make a claim, any type of claim, first party claim, in the state of Florida and in all the jurisdictions, but particularly in Florida, they have 90 days to issue a coverage determination. That's the insurance company, 90 days. If you demand insurance policies under Florida Statute 627, the liability policies, builder's risk policies, they have to issue coverage determinations in even less time. So I don't know any lawsuits that are getting answers that soon, or that early on. So think about those things, food for thought. We are doing it on a daily basis, so we obviously know what we got going on here. And by way of example, I mentioned earlier on a building, it's in the Edgewater area of Miami, that had issues with a hose. That's why I brought it up earlier. Very similar. We had hoses, valves, cabinets, pipes, and all these other different things that was servicing the appliances that all intersected and caused crimping in the lines. This crimping led to a failure in those lines and tremendous amount of water damage, various different losses. Ultimately, the association ended up retaining us because they were getting a little bit of pushback from their first party insurer, the property insurer for the association. Further investigation realized this is a newly turned over building that had an ongoing 558 lawsuit. There was some just grandiose claim that was made against the developer. We started getting in the weeds on it and realized, you know what, we can probably pick off this matter and pursue a recovery for this particular issue. Now, they had a lot of other issues that their attorneys were properly handling and certainly were justified in taking those sort of actions. But this particular opportunity had got caught up in that whole thing and was there for quite some time. And we, in a matter of months, were able to get an over $1 million offer from the various insurance companies and parties involved for the repair and mitigation of not only the damage it was causing, but in order to repair the issue. So something, again, to consider, that even if you're embroiled in a 558 lawsuit or whatever else, it's still not too late. We can take a look at these things. Again, we work very well with the different professionals. We work right into that process. We want to do these things on dual track them, right in parallel. There's a lot to learn from each other, and they certainly can benefit each other on both sides of it. So this isn't to say that you don't need to do that, to pursue the 558 lawsuit. It's certainly to say that there may be some issues that are getting caught up in it that we can get resolved earlier on. So as a wrap up to some of the community association issues, and which was the topic for today, so I don't want to be all doom and gloom, but that is what I wanted to focus on, because we are in the fall, we're headed towards the winter months. A lot of unit owners are going to be coming down to the South Florida region. If they're not here already because of the pandemic, they got here a little early. But usually a lot of projects kick up around this time in preparation for the snowbirds. So I want to make sure we hit on some of these things to consider. One of the things we saw really come about, and something new to community associations and insurance, is arbitration requirements in those policies. It's something to look for, and it only is important if you have a dispute with your insurance company. Do you need to exercise that right? But what's important about it generally is that if you do get into a dispute, which unfortunately quite a few claims do, you're going to be required to arbitrate based on New York law, even if you reside in Florida. Is it right? Is it justified? Does it make any sense? In my opinion, no. But that's what the policy says. And unfortunately, as current case law, as I've been told by several different attorneys, is that the courts are really not fighting this issue and allowing the insurance companies to assert that right. It's very expensive. It's certainly a disadvantage to the policyholder. And if you don't think it's going to happen, just go out and ask dozens of community associations and business owners that are going through it or have gone through it, and just ask them about the cost of this thing. I mean, I've seen quotes of hundreds of thousands of dollars just to have the arbitration. Out of pocket, by the way, and that's without even any expectation of a result. So a lot of times it's couched in this idea that if you buy this certain product that includes this arbitration provision, that you're somehow going to save on premium. All right, well, it's like pay me now or pay me later kind of situation, or the reverse of that. The fact of the matter is that it's certainly going to cost you more in the end. It's completely backwards, and I certainly encourage all property managers out there or business owners, ask about it. It's a simple question. What does it hurt? Just giving you some useful knowledge, something for you to go back to your broker, your agent, ask them about, hey, does my policy include arbitration? If it does, where does that arbitration need to occur? I've even seen some policies for business owners say London, England, for Florida policies, for New York policies. We have offices in Florida, Washington, D.C., and New York, and we operate throughout the country. I always feel like I've seen it all. But we have had actual claims in both New York and Florida have arbitration provisions that require a venue in London, England. In Florida, after Hurricane Irma, we saw mostly the arbitration provision where it was New York. But again, very expensive process. It's certainly backwards. I don't quite understand it. And a few of our clients actually fought it, went through the process. In some instances, I think the insurance company realized it was even going to cost them more money to go through with the process than it was to resolve it. So it ended up actually helping us get it resolved before the arbitration kicked off. But had they gone to it, I don't even know how much it would have cost them and how long it would have taken. Just months. So look for it. Again, some food for thought. Well, I want to thank everyone and all of our attendees for tuning in today. It was an opportunity for me to talk directly to you about a lot of issues we're seeing as we head into the holiday season. I want everyone to stay safe, keep an eye on the weather. We're not out of the woods here with hurricane season. As we see with Hurricane Delta, Cat 3, Cat 2, again, hearts go out to all those in the Gulf region that may be impacted by this. It's certainly something that is just devastating to see, an area that's just been absolutely been pounded by these massive storms. And anything we can do, obviously, we are here. We're always on the front lines. And speaking of being on the front lines, so excited this week to launch Love in the Bag. My marketing team pulled together one of the most unbelievable programs to help our local community, our local businesses and restaurants rebound from this terrible pandemic as the regulations have been rolled back, phase 3. We want to be part of the solution. We want to get out in front of this thing. And check our website. Go to getglobalpro.com/loveinthebag. It's an amazing thing. If that's too much for you to follow up on, Love in the Bag. So getglobalpro.com/loveinthebag. Even simpler, go on our Instagram, go on our Facebook, LinkedIn, check it out, click the links. Awesome article, and Ocean Drive was written about it. There's more to come on that. We've had several of our own clients participate in it, but it's open to any restaurant out there in our local marketplace that want to participate, want to jump in on it, shoot our team an email. You can email support@getglobalpro.com or Rena, who is we're live on Instagram right now, so new thing for us, and I'm very excited to do it. Check it out. It's really cool. Again, the whole idea is about creating awareness, is about making sure that our community is taken care of, is about GlobalPro being on the front lines. I've done it since day one. Our team has rallied behind this thing. We're investing major money and time into it because we know how important it is to make sure that we get out of this and that there is a tomorrow for a lot of these business owners, a lot of talent out there, chefs. I mean, I love food. Believe me, I love food. Anyone that knows me, I love to cook. I love food. I love going out, going to restaurants, and we want to do our part. So join in with us. Get some love in the bag. It's super easy. You want to learn more about it, check it out. GetGlobalPro.com/loveinabag. So again, thanks to all of our attendees for tuning in this week. Go online at GetGlobalPro.com, check out our website, check the resource section to read and download important information you need to be prepared. And like I said, we're still in hurricane season. Be sure to check out our YouTube channel to watch today's broadcast and like us, follow us, and engage us on all the social media platforms. We love to connect with our clients and community, so call us anytime or shoot us an email. Remember to tune in next week. We will be joined by our very own Josh Bachner. He's one of our attorneys on staff here to continue our discussion about new insurance trends for community associations. I want to continue this conversation. There's so many important aspects, but this time we're going to focus on current case law. So again, thank you to all of our attendees for tuning in this week on the Recovery Report Live.